Oh man, so the IMF have revised down their global GDP forecast. What does this mean for your stocks and your crypto investments? We're going to have to take a look right now. But first, what have they actually revised down? Well, they revised the global GDP forecast. Initially, it was 6% in 2021. They've revised that down to 5.9%, and they kept 2022 forecast at 4.9%. globally. Okay. Now, for advanced economies, they expect pre-pandemic level GDP to return in 2022, but their report focused on the lack of growth in the underdeveloped economically developed countries. So they referred to the emerging market and developing, excluding China, and they forecast them to remain 5.5% below the trend until 2024. So this is really taking a long impact. And now we're thinking about pushing this lack of GDP growth into 2024. Now, this included downgrades for a lot of South Asian countries such as Indonesia, Malaysia, Philippines, Thailand, Vietnam. And they actually, for that region, they expect growth to be slashed from 4.3% to 2.9%. That's a massive revision down in GDP. And we know this has a direct impact on the more economically developed countries such as the US and the UK. Already, Nike, for example, are feeling a pinch on their inventory due to exporters like Vietnam having a shortage in workers and COVID-19 restrictions getting in their way, right? That means countries like Vietnam are unable to export to the demand that Nike is requesting, and therefore Nike earnings and their stock price will follow suit. And we're expecting to see that and hear these anecdotes in this earnings period coming up over the next few weeks. We're waiting for retailers like Nike to share their earnings and share their anecdotes around how they're struggling to get supply in. We know there are backlogs of ships at ports. We know factory production in some of these emerging markets are suffering, and that is going to lead to a knock-on effect and some contagion, right? And that's the challenge here. Now, also, the US has been projected 6% versus 7%. So US was revised down 1% for 2021. However, the IMF think they'll still be strong at 5.2% in 2022. There was also downgrades for Germany, for Spain, for Japan, UK, Canada, and China was forecast slightly down 8% versus 8.1%, but still, nonetheless, a revision down. And ultimately, the IMF were focusing on one key thing. They're saying their advice is they need to focus on vaccine programs in less economically developed countries, right? So at the moment, there seems to be good success in vaccination in the Western economies, but not so much in some of these other economies. I mean, they mentioned that 96% remain unvaccinated in low-income countries. And naturally, this is going to have a knock-on effect on the entire global economy, right? These are the exporter nations, these are the manufacturers, these are the producers. And if they're not producing, then how are these Western economies going to run? Ultimately, they're not, right? And that's what we're going to hear and expect to hear in earnings reports going forward. Now, the IMF have therefore indicated that we should expect some more persistent inflation, although they feel it should be getting better by mid-2022. But we don't know that, right? We've heard a lot of CEOs say some of these supply chain bottlenecks will continue well into 2023. Already they're saying that. So we're getting a bit of mixed messages here. It'll be interesting to monitor that over the next few months. But in essence, the IMF have provided a warning to central banks as well to say that it's important that they're prepared for the risks that inflation can cause. In other words, what they're saying is be ready to loosen your monetary policy. So if you're tapering, be ready to start tapering. Sorry, if you're purchasing bonds, if you're doing QE, then be ready to start tapering. And if you're not doing any QE, then be ready to raise interest rates. Okay, so all these economies will need to be cognizant of this, because if we're not dealing with this issue of getting the emerging economies vaccinated, then ultimately their worker shortages and COVID-19 restrictions will lead to less output, reduced GDP in emerging markets, and ultimately that will have an impact on the GDPs of the more economically advanced economies and regions. Okay, so that's really important. Now, what impact can this have on Bitcoin as well? Well, we know that if we get persistent inflation, that could be a positive catalyst for Bitcoin. And it probably explains some of the reason behind us seeing such a strong Bitcoin right now. I mean, Bitcoin seeing the highest prices it's seen since 12th of May at the time of recording this video. And again, that could be that, there's no coincidence that's happening when we're seeing rhetoric from politicians and from bodies like the IMF suggesting we're seeing more persistent inflation than we were led to believe. We were always led to believe by central bankers that this was transitory. It's going to be here for a couple of months and be gone by the end of 2021. Well, we're now seeing that used car prices are starting to inflect upwards, right? We're seeing a turning point back in lumber prices. We thought they were coming down and they're heading back up. We've seen oil at multi-year highs. We've seen numbers of ships stuck in docking stations where normally you have one ship waiting, there's 80 ship plus waiting, right? We've seen unemployment falling, and yet there's still the most number of open job vacancies that the US has ever had. So why are these not being fulfilled, right? There's not enough jobs growth. We saw the weak jobs figure in the non-farm payrolls, and therefore earnings are going up. So we're seeing a lot of inflationary elements, and the concern now, and the buzzword is, are we going to see some stagflation? And I think the stagflation debate is an interesting one, and we'll need to see how this plays out over the next few months. But it doesn't seem like the stagflation we saw back in the 70s. We are seeing less. The definition of stagflation is for inflation to be going up, but not at the same time that the economy is getting better, right? You're getting worse employment and you're getting worse GDP growth. And we're seeing slow GDP growth, and we're seeing not enough jobs coming back in just yet. But this feels a bit different than the previous times we've seen stagflation, because we're in a pandemic, right? It's an unnatural cause, it's unprecedented, and it's not a natural occurrence of an economy. And we suspect that once all of these pandemic-related challenges have been solved, then we should be out of this situation. But the reality is we've got to solve these issues. We've got to get these countries vaccinated. We've got to get those that are willing to work back into work. There's a skills gap now where people have changed their expectations of the type of work they want to be in. So we need to resolve that as well, because there's 10 million plus jobs available. There's employees available, but they're not taking those jobs. So there's a skill mismatch going on. For whatever reason. For example, people now want to work from home. Maybe they don't want to take a standard retail job in a Walmart or a hotel job or a hospitality job. Maybe they want to work in a more technologically orientated job where they can work remotely, spend time with their family, etc. So we've got all of these challenges to tick off. And until we do, then we can't rule out stagflation like some are saying, because the definition of it is you see economic growth deteriorating, you see unemployment not improving, and inflation's going up. And technically that's what we're seeing in terms of the metrics right now. It's just over what period are we going to see that, and will it resolve itself going into 2022? All things which we need to look out for eagerly. We get the CPI reading tomorrow. I'm going to post a video on what to expect in that reading tomorrow, so watch out for that. If you like my perspective and the way I tackle some of these macroeconomic issues and break them down for you, then please don't forget to hit the like button and subscribe. Let me know in the comments what type of videos you like to see, and I will see you in the next one.